Good morning, traders. This is Michael coming to you from Game Edge on Thursday, August 14th, with our pre-market prep session. As always, at Game Edge, we'll cover our three pillars: sentiment, structure, and trend, as well as we'll talk about the pre-market price action that we're seeing. Make sure you check out our X post that we posted this morning. We're already talking about wider transitions, and we're obviously seeing greater volatility with that morning PPI print. So GameEdge.us, here is our webpage. Join and sign up. Free newsletters for the weekend, as well as our pre-market prep daily. Click on this, put in your email. You'll be sent those. Again, extensive education that we produce every weekend about how we use the tools here at GameEdge, SPX option structure, and various content that we've picked up over the week from our members or from responses on X, and we do a deep dive into those topics. Free courses here, Game Edge Fast Pass. This is our flagship educations course that we spent a significant amount of hours on. Sign up there for free. You'll be able to get all the content, read that, and study up on all the tools, as well as SPX option structure. School of Options free course here, and then the Mental Side of Trading free course, and we'll be adding courses on down the road, all for free. And then sign up for our Discord. Again, click on pricing here, come join us in our room, and you'll be given the SPX game plan in-depth dive every day, as well as posting our trades, as well as interacting with our larger community of traders from all experiences, from market makers to money managers to new traders just starting out trying to navigate the option structure, zero DT, as well as the longer term SPX option structure. So jumping right into it, market trend model here. We saw a significant update yesterday, linear up in the market trend model. Obviously, this is based on the tick index, a large amount of buying occurring yesterday in the overall market. Draw your attention to the bolded CT. This is our cumulative tick. This is what we look at intraday for our instantaneous. Again, as long as we're above the moving averages and moving to the upside, that's indicating that more stocks or more market participants are buying than selling. Again, breadth indicators, new highs versus new lows on the green were just significantly to the upside. Probably a little frothy, as we talked about yesterday, that we were seeing a GEX ratio possible reaching extremes. We'll talk about that here in a few minutes. But again, significant buying yesterday in the overall market, and then a red above cyan to the upside. This is our longer look back period for longer market positioning. Moving on to the tick RC, this is our quality tick. This is what we run our mechanical portfolio triggers off of. Again, linear up yesterday, significant amount of buying occurring in the overall market, and you really are starting to see these slopes turn to the upside in the red and cyan. Again, this is a longer look back period that we may just be starting a significant run to the upside. But again, we'll continue to watch this. Obviously, a pullback to the ribbon would not be out of the realm of possibilities after a significant run of all-time highs in the overall market. And then we'll watch these moving averages. These are short-term momentum moving averages, and if we start moving below those, we'll just be a little bit more cautious and then start to rein in our risk management a little bit as we continue to watch how market participants are buying versus selling in the overall market. All right, moving on, the SPXA. This is obviously our cruise ship. These are larger contracts, obviously monthly expiries. These don't turn over as rapidly. So this is how institutions as well as larger market players are positioned. We see 6,500 up here as PGEX, again, key upside level, and then 6,425, 30 to the downside. That's the top of the transition area there, and 6,400 will be a level that we need to stay above for bulls to stay pretty much in control of the SPXA. Again, in the money call, dominated above and below spot price. So any pullback really for us is an opportunity to get involved in the market at this time. Again, unless we see a larger change of positioning start to happen post OPEX, which obviously is this Friday. But heading into September, we're still seeing call dominated above and below spot price. Once this OPEX happens, where that money gets allocated, we'll plot our trajectory on for the next few months, and we'll be able to see that within our web app, as well as dissecting the option structure. Moving on, the SPXP, again, all expiries turned on. These contracts turn over much more rapidly, and we like to separate the SPXA and the SPXP so we can get an understanding of the short-dated call gamma delta that is going to have the greatest influence on your zero DT, as well as the weekly expiries, and then the SPXA exerting its larger force on the monthly expiries and just an overall force of the market. So again, to the upside, 6,500. key area we are watching. Obviously, that's a JPM short strike. Also, again, if we stay above 6,400, this becomes most likely a possible magnet to the upside. You see our transitions here. They're kind of mismatched for today. Obviously, we see the GEX transition up here, DEX transition, and that's what we were discussing pre-market in our 0 DTE. We were seeing mismatches on the transition. Again, that gives us a little bit more caution about uncertainty for price action. And then there was a IC that is on the board for the 0 DTE SPX option structure that we'll talk about. Again, staying above 6,400 is going to be a key area for the bulls if we pull back all the way to that level. So we'll watch that, and then we'll update you on the option structure as we pull down through or into those overall areas. All right, moving on to GEX ratio. This is a key component for today. Make sure you put this feather in your cap. We were discussing the GEX ratio reaching an extreme of previous area back here from July. Multiple times we were reaching 2.3, 2.4. This is historically an area where we've seen a pullback for the past few months. We weren't predicting anything, but just saying, hey, this may be an area that we could see a pullback. Obviously, we saw a doji candle yesterday if you're into technical analysis, and we saw a negative divergence with the GEX ratio. So that's just indicating short-dated call gamma is leaving the overall complex. Again, not saying a large amount of put gamma is coming in, but as the short-dated call gamma leaves, this creates your downward slope in the GEX ratio. So again, just an observance. When we see this divergence, again, we don't go full short the market. It just becomes a cautionary look, and we are looking for an overall pullback, as you've seen here. In the GEX ratio, we talked about the sine wave yesterday of the out of the money calls reaching a in the money point, and then you see a greed component and you see a monetization of those call speculators. And then we turn back to the downside, the other side of the mountain, and you see the out of the money put speculators, which we've been talking about, this out of the money put speculation hedging coming into the market as we're reaching all-time highs. That is not anything that is different than what we see. It's just short-term advantageous put holders trying to take advantage of again, possibly a quick pullback in the overall market. Again, a well-hedged market does not crash. So as long as we have those out-of-the-money put speculations below us, within an overall in-the-money call-dominated complex, then those can be supportive as we pull back. Now, if the structure starts to change and we see the degradation of those in-the-money calls above us, and those turn to in-the-money puts, and then we see a significant amount of out-of-the-money put speculation below us, and when those start wiping away the in-the-money calls, then that changes to a put-dominated structure, and that becomes slightly weaker, and we look for a larger pullback to the downside. As of now, we're not seeing that. We'll look to see what happens with the PPI reaction as well as OPEX moving forward past this August expiry. So anyway, divergence on the GEX ratio, which is put call ratio, but we add the gamma time component because it exerts its short-term force, and we like to see that what is happening within the overall tools. Moving on to the delta balance. Again, this chart is interactive, as all of our charts here are at Game Edge. So you can click and scroll over these. Again, staying above zero. Again, we see that negative slope in the out-of-the-money call speculation, which overlays to what we're seeing in the GEX ratio. So again, these tools are all a mosaic, and they all complement each other of understanding what is happening with the market participants and positioning in option structure. So negative on the out-of-the-money call slope. So obviously price appreciation may be difficult unless you saw a significant ramp up in the out-of-the-money call speculation. Again, the in-the-money calls below us are in a positive slope. So again, as we continue to move up or stay above certain levels, we capture more of those out-of-the-money calls become in the money. Again, that continues to drive that slope to a positive slide. Delta balance at 1, call dominated within the overall structure, bullish there. Projection on out in time was to be delta balance at 1 and structures above 0, so that is bullish and call dominated. Again, we'll see if that changes after today, and then heading into next week after OPEX. So moving on, SPX P0 DTE for today. So we posted this morning on X, wider transitions, a little bit mismatched. So this is greater price uncertainty. Obviously the PPI came out. Nobody can predict what a PPI number was, but we were already seeing a larger, wider transition, which meant greater uncertainty for market positioning and market participants. But we also had the IC that was in place up here at 64.95, down here at 64.35. So again, web app makes it easily visualized. Click on it. You can see that if obviously there's an IC in place, easily visible really quickly in the morning, and then you can start putting your trading plan together. So our drunken sailor range, 64.35, 64.95. We came down to 64.35 already this morning, and we'll continue to bounce from that level. Confluence of the GEX transition also. So key area to the downside, PGEX, INGEX. So below 64.35 will be a little bit more negative put dominated environment and structure. So we'd anticipate to drive possibly down towards 64.15, which is the bottom of that DEX transition. And then we'd look for intraday volume metrics and market participants. Obviously 6,400 round Livermore number, larger GEX DEX level, just a significant level for the overall market that we need to stay above, obviously, for bulls to pretty much maintain control. Above 64.95, obviously we'd be looking for 6,500, and then we see COI up here at 65.40, which most likely is going to be completely out of the realm of possibilities today, again, unless we see some major turnaround in the price structure. So our overall look and plan for today would be contained between 64.35 and 64.95, drunken sailor range, lower exposure area at the mercy of intraday volumetrics and market participants. So we'll watch our vol M command, see how market participants are positioning for today. Below 64.35, we'd be looking for 64.15, probably stalling area, possibly look for a bounce back towards the bottom of drunken sailor range. If that's a failure, could be a nice shorting opportunity for a move down towards 6,400. But again, if we're in the overall drunken sailor range and within the realm of transitions, it will be very choppy. And we'll watch the intraday volume to give us an idea of where market participants are positioning. SPXP net stack command, highest sensitivity levels. We were looking at 64.35 to the downside pre-market, and that's where we started to stall. I'll check the price action here a little bit, and we'll look at our trading view chart with our scripts overlaid. To the upside, 64.95, obviously 6,500. We'll force this spot price for net stack command in the Discord for our members, so we'll be able to see this highest sensitivity area and how it navigates the structure. The OI will not change, but we'll recalculate the Greeks on that spot price move. And we do that in real time with all of our automated channels. So that's as updated in real time, understanding the effects of Gamma, Charm, and Vanna, as well as Delta as spot price moves up and down the overall SPX option structure. All right, let's move on to what we're looking at for today. Let's check the pre-market price. Okay, so 65.44, we were talking about 65 or 64.35 this morning, obviously holding prior day low 64.38, where we're looking around there. So again, 64.35 continues to hold pre-market. So we'll watch that area. Again, lower IC area, key gamma delta level. So we'll move on into our trading plan for today. Again, our trading view scripts, as well as think or swim scripts, are automated. For our members, you can download them and just overlay them on your chart. So here we go, drunken sailor range. This matches our 0 DTE. I'm just overlaying it on the trading view chart for people to get an idea of how we navigate this. Again, we came right down to the top of drunken sailor range yesterday, review our overall pre-market prep. Came right down, we were looking at 64.75. We said that's a key area we need to get over, but it's going to be a very difficult hurdle. We had the OI there, understanding what we needed to see from the intraday volume run rate for the net OI. We were not seeing that after the open, even though we ran up there. So our anticipation was that it was going to be difficult to get over 64.75, and obviously it was. And then we failed there. We came right back down to the top of drunken sailor range, which was 64.50 yesterday. We held and then went back up. Again, I said yesterday that was an opportunity to get involved on a pullback to the top of DS for a long. Turned out very well for many of our members. The short from 64.75 to the top of DS, as well as long from 64.50. Moving into today, we're already at 64.35, which is this key area to the bottom of drunken sailor range, bottom of GEX transition. If we get below this area, we'd anticipate possible quicker move to the downside towards the 64.15. You'll notice COTMP on our all expiries. This is where out of the money puts become in the money. Again, this would be a highly likelihood area where we'd see possible monetization around in those areas. So that could be a bounce point. Again, if we get below 64.15, we might see a drive to the downside to 6400, and we'll be watching their area. So again, traversing this 64.35 at the open is going to be the utmost importance. If we hold this 64.35 along, again, we're within the overall drunken sailor range and can be choppy, driven by intraday volumetrics. So our key tools of vol M, we'll have to watch at the open and see where market participants are positioning. Would we see a significant amount of puts closing, and that will drive us a little bit higher without the out of the money call speculation? Or do we see puts closing and then we see out of the money call speculation come in up towards 6,500, which would drive us higher? Or do we see in the money or out of the money calls closing and then out of the money puts opening, which would be negative centroids, and that would drive us lower? So we have 3 key states there. We'll watch for the open on our vol M command. So anyway, hopefully that helps everybody. Obviously, news this morning dropped us into this lower area of the bottom of the drunken sailor range, as well as a key GEX area that we'll watch at the open and see how price reacts. Again, wider transitions today, so greater uncertainty, possibly smaller position sizes, and shorter term trades may be the MO as we head into OPEX tomorrow on Friday. So I'll hang around for a few more minutes. Anybody has any questions, we would be happy to answer those, or any single stocks anybody wants to cover. So I appreciate everybody joining us. Like and subscribe, share our content with whoever you know, and let's continue to build this community within our Discord, as well as our online YouTube viewership and our X interactions. So yeah, UNH, yeah, I think I pulled that one up yesterday for a few, the other day for a few people. We were still, we were changing to call dominated on UNH. So it was interesting that we were actually seeing the overall structure change as UNH was reaching some extreme levels to the downside. So now we're above transition. 280 is PGEX to the upside. That's going to be a key level. Obviously 265 COTMP on any pullback. We're going to need to hold that. And then above transition, 255, 257.50 will be key. And then you see COI up there at 300. That's the highest call open interest. Again, not saying we're going that direction. But when you see the overall structure change to call dominated, I mean, this is a significant amount of in-the-money calls above and below spot price. So these should be supportive on any pullback. And it's funny, we're talking about that in the room, and some traders that are members of ours that are on X actually capitalized on the UNH as we saw the structure start to change to call dominated. Out of the money, significant amount of puts were closing as we reached some key areas. And then we saw the out of the money call speculation come in on UNH. So that was cool to watch and good for a lot of our members. And moving on to Microsoft, call dominated above and below spot price. Obviously need to hold above transition. 517.50 COTMP there, PGEX. You see COI down here, so it's a little bit mismatched under 500, but you see PGEX at 530. So that would be kind of the upside speculation area. Let's look at Friday's expiry. 530 COI, 525 PGEX. So I wouldn't anticipate us to go much higher than 525 up towards 530. And then we need to hold transition area for the bulls to stay in control. But call dominated above and below spot price still. I'm not sure Rocket has OI. So it only has 1 million OI. So this is lower OI. Again, not necessarily dealer, market maker control, but we can look at it. Yeah, absolutely on Microsoft. Yep. So it's call dominated. Looks good. Looks like we're above PGEX. COI is all the way up there at 2420. That's kind of interesting. Those may be call OI, put OI, so that's matched there. That's a far stretch, 2420. Expected move is 2 points, so 10%. So you're looking roughly at $20, in between $20, yeah, around $20. Right where COTMC is, so I would anticipate that would be most likely the cap on price for now. And you're pretty far above PGEX. So our P trans to PGEX portfolio, PGEX historically is where you see some profit taking and monetization. So that could be the area. And then you see PGEX and COI under. So again, you don't have a significant amount of out of the money call speculation heading into Friday. So price appreciation would probably be difficult. 20 would be the cap, but I'm not sure we'll even get up towards that level. So, all right, hopefully that helps. All right, everybody, thank you very much for joining us. Everybody make it a great day. Again, manage risk and be careful out there, and we'll see you tomorrow.